and we are the opposite of dead.
Wow, that was...
We're live.
Yeah, that was not...
A little darker than you had intended?
That was a little bit too dark almost for me.
How you doing today, man?
And it's like you're alive, not live, you know what I mean? So you said it completely wrong anyways.
You're just stealing my thunder.
Yep.
I tried, folks.
Nope.
I tried. It's impossible with the beard.
I'm gonna beard punch you in a second if you don't stop. But I'm good, man.
Yeah?
Good. Yeah,
Good,
just
man.
watching the markets. They're actually looking pretty decent.
Yeah.
So I'm a happy man. So how are you?
I'm doing well, and just for our viewers tuning in, Chiron, Biome Grow, Harvest One, and Fire and Flower will not be on the show today. That will change very soon. Instead, what we're going to have on is we've got Chris Arthur for Ask a Fund Manager. 4 really good questions that our investors have been asking and
Who makes
don't
these
know.
questions up? Is it like you? Is it like our
I always
community?
put the first 2.
First 2.
I put 2 because that's what Facebook needs. You need to put 2. That's why it's in our private group opposed to our public group, because the public groups
I thought
don't
you
let
did it maybe because you wanted to, but it's because you
to start the poll, you have to put 2 questions.
All right.
So we'll always start with 2 questions, and then other people can come in, put their own questions, and then vote for what they want.
Okay.
And there's some really interesting questions in there surrounding your
traction.
portfolio.
People want to
and what
know.
do.
People want to listen to Sir Chris.
Yeah.
You see how I did that?
You like the Sir Chris. See? Yeah, it's catching on. It's catching on. Respect, folks. It's important. We've got that, and then we've got a segment that we had in one of our nightly podcasts with Peter Clousie.
Oh, yes.
He's CEO of CBLT, of Cobalt. But he also does a lot of work in other areas of mining and cannabis as well. Next time we got him on the show, we'll talk about cannabis. But we really did this one segment where it was about why mining, and specifically going over cobalt. And he went into a really cool history of where to find cobalt, why cobalt in the Congo is not ethical even remotely, and just going over what's going on with cobalt and how much do we need it. I want to put a URL into the YouTube chat. I'm going to do it in the Facebook chat as well, so bear with me. We're going to play this, but we have to be very smart with copyright. And although we have full attention to bring your attention to this person's LinkedIn, we're not going to play it on the show, but instead we're going to put a URL into the chat rooms because I really want people to watch this.
Yeah.
So I'm going to try to find it right now.
It's a shorter video, so it's pretty good.
Yeah, it's not too long. It's about 3 minutes, but essentially what it does is it takes a cell phone and it grinds it up, and then scientists can then extract.
Vitamix or something?
For vitamins?
No, like with Vitamix.
With Vitamix, what's that?
It's like grinding it up with a Vitamix, like a blender.
Okay.
Is it the Vitamix that they use?
I have no idea.
Come on.
I know. I should have done this. Darn it!
Anyways,
grind it up.
It grinds it up,
and you get to see all of the different metals that come from that one phone. Then they multiply that by the demand for phones in the world. This is just smartphones, not laptops, not the screens beside us.
Literally just phones.
And on a soccer pitch, it shows the dimensions of how much of these different metals you'll need just to satisfy metals. And it's a really cool done, very well done video. I'm going to find it throughout the next little bit here and throw it in the chat room because I want people to be able to see that, but we won't play it on here. But that really does lead into our segment with Peter, where it was why mining. And we've been talking about this for a while because we want people to be able to start looking for the next thing. It might not be too sexy right now. A lot of people say, why do you guys keep talking about mining? And there's a reason for that, though.
Well, things are moving, though. Like, I mean, if you have good assays and stuff like that, like, you still get good movers. But for the most part, yeah, you're right. It takes a little bit of time for these things to, like, get going. But, I mean, like you said, the demand is going to be there, but it's not right now. But it's a good place, a good safe place to kind of almost keep your money because it will be needed.
Yep.
So I mean, that's what's good about that video is it kind of explains like, look how much we need just in a phone and how many phones are out there. And it's just like, and that's all anybody's ever on is a phone. So, I mean,
well, just everything. The microphones we're using right now, the screens that you're watching.
We literally have our phones here. You have microphones. We have microphones and laptops. Like it's just it's
all
needed.
Rare earths, precious metals. They're all in there. So yeah, no, very interesting video. I've got it here. I'm just gonna copy and paste it before I digress and forget. So put it into the chat right here. Faye Smith, good morning to you as well. Even though it's afternoon here, you must be in PST time, so good morning to you. Throw it into here. Will that allow me to? Yes, Facebook allowed me. Then go into the Facebook group really quickly and throwing it in there as well, because I want all of you to see the video.
Enjoy it.
And then commenting into our Facebook now. Boom.
Boom.
Both are there. Go on there. Watch it anytime. But my man.
I guess speaking of cobalt, that FCC, First Cobalt, what is it called? Let me find it here. She's moving. She had good, I guess, good news, and it has the most volume it's ever had.
Oh, wow. It's always nice to see.
Well, yeah, 100%. So that's what I mean. Like, things can move, but again, like, we're like, even in this chat, we're still trying to figure out what it's all about, and we have the right people in our chat. So we got Hoove in here. Hopefully he can answer the question, because he probably can answer it the best.
See, that's where you need a sir.
No.
Sir
right.
Hoove.
Sir Hoove.
Yeah.
I'll change his handle to that.
Yeah.
He doesn't know yet. But yeah, no, some stuff really moving today. So what else is moving? You see some?
Well, I think what was really, really interesting was yesterday. So, or this whole week. So if anyone's paying attention, you'll know that it's the beginning of the month, and the United States has been putting out a lot of data, a lot of economic data.
Yep.
I get it. Sounds boring, but important, because a lot of those are either leading indicators, coincidental indicators, or lagging indicators. All these things are basically telling you the state of an economy. Mm-hmm. And when you see a lot of these coincidental indicators going negative, especially month over month, it keeps going, that's when you start leading closer to a recession, because a recession is simply 2 full quarters of negative GDP growth. For the most part. There's other aspects. People view it differently. It's not a perfect science, but that's one of the bare aspects, is if it's 2 quarters of a declining GDP.
Yep.
It's,
I didn't know class was in session,
recession.
but I'm excited here.
Yeah, well, if you look at these things, though, Johnny Mac, not with us today because you're in the Bahamas or somewhere very, very tropical. I saw a photo. It looks fantastic. I'm jealous. But even though he's on vacation, you're still sending us a few things, looking into these numbers where you're looking into manufacturing, you're looking into retail sales and retail goods and all that kind of stuff. And all of those in the United States were negative. They were missing expectations. And that's not necessarily a good sign for an economy. What's helping, I think, is that China, their manufacturing numbers beat expectations. And the whole reason why we thought we were going into a global recession and markets are a little bit weary is because when you start seeing powerhouses like the United States and China having these negative numbers, that's not looking good on a global scale. But China actually outperformed. And for whatever reason, people are like, I don't care about these US numbers right now. And everything was going. So keep an eye on that stuff, though. But it's just interesting. All the indices were green this week.
I mean.
Cannabis was blood red yesterday.
That was pretty bad yesterday, yeah. But I mean, it's turned around today. Like, I mean, obviously some are down, but like, I mean, BAM keeps moving. It's up 8%. What else is out here? Look at this. Oh, well, back to that FCC. It's back up 40%.
Look at Bliss. Blisco.
Oh, yeah.
Blisco is up 12% on 830,000 shares. By the way,
are there options out, or?
I don't know. A lot of big ones do. For anyone watching this, we've been sending out on a post on our Facebook groups and different things, because later this afternoon we're having an interview with Blisco and talking. So if you do have questions, it's not going to air today, but if you have questions, throw them into the Midas YouTube chat, and I'll be staring at it. Throw into the Facebook page, I'll be staring at it.
When do you interview them?
At 4:30 this afternoon. So it's not during any of the times of our shows, but if you got questions, folks, this is why we do this. Let us know if you have questions for Blisco, and we'll be sure they're asked. Canopy Rivers is on Friday. If you have any questions for NARB, the president of Canopy Rivers,
it's been a bit since we interviewed them, so it'd be kind of nice to see what they've been doing since we interviewed them last. That's kind of nice.
Yeah, it was Daniel Pearlstein we interviewed last, and that's what I like about.
He knows how to talk too.
He was good.
He was interesting.
He was good.
100%.
And I want to know what they're up to, because I know they've got an eye on U.S.
Yeah.
And they're working on ancillary products, but without it being federally legal, they will not and cannot, due to canopy and due to listing.
But I mean, being with
requirements.
Canopy, you could probably find a good way to do it, kind of like how Canopy bought a tomato farm in the States to just sit on till like that. I think it's in their sales, like it's in CEDAR that they have sales from a tomato farm, but they're waiting for it to pass in the States to eventually, obviously, retrofit it into a cannabis.
Yeah, I don't know if many people actually know that either. You know, they're. Well, look at if you remember that interview with Daniel. I just rewatched it earlier today, funny enough, and they were talking about there are certain instruments that they have in place to where it gives them the ability to purchase certain companies or have investments in companies in the US who are plant-based. Because remember, there's plant-based and there's ancillary.
Yeah.
There's two different things.
Yeah.
Where the ancillary could be your grinders, it could be papers, it could be literally anything that doesn't actually touch the cannabis plant. Those are still okay.
Yeah.
But when it's like federally illegal stuff, like edibles, anything to do with cannabis related, other than hemp, because the Farm Bill. But for those, they can't be a part of that, because that affects their listing on TSX Venture. It also affects Canopy, their parent co, if you want to call it that. It's not that closely related, but basically is.
Yeah.
Because they're listed on the New York Stock Exchange, and you can't be having activity in a federally legal
Not on that exchange.
product or service, whatever it be.
Yeah.
So anyway, it was just really interesting going into that and knowing the workaround they have. So I got a couple follow-up questions of, are there any more of those? Where are your eyes and all that? So that's going to stay tuned for that to air sometime next week. But going into Chris Arthur.
Chris questions.
And Ask a Fund Manager. I actually really, really enjoy doing these segments because there's a lot that people can learn.
Man,
I
he's a
learn
smart
on
guy,
everyone.
that's for sure.
I love it. He does it really well. He says it in a way that people can actually understand.
Yeah.
And this is what affects your portfolio. So we're going to go to that clip now and see what he had to say about the questions that you voted for on our Facebook group. And we're joined again with Chris Arthur for another round of Ask a Fund Manager. My man, welcome to the show.
Yeah, doing well, Brandon. Doing well. How you doing?
Doing fantastic. And I was just thinking about this earlier. This has to be like our 8th, 9th, or even like 10th time doing this now.
No, yeah, I think 9 or 10 by my count. Yeah, getting up there.
Yeah, they've been good. A lot of good information in there. For anybody who finds this useful and like this segment, we've done a lot of other of these. So tune in either in the current YouTube channel that you're currently watching. Look for our material. We also have the segments that are broken down, just saying Ask a Fund Manager, on our Facebook page, FTMIG. So you can look for more, because we went through like naked shorting. What is it? Is a recession bad? The inverted yield curve that everyone's been talking about recently. It's just a lot of good points to go over. So I appreciate these segments, and thanks for taking some time for your busy day to come in.
I'm happy to come down and help educate our community. And I would say I love these topical questions as well. So if something's happening in the news, in the market, let's discuss it on the show and let's get to the bottom of it.
Perfect. Well, speaking of getting to the bottom of it, we got the people have spoken. You've spoken. That we've got 4 different topics we're going to go through one by one. You've got your own order of how you'd like to do them, but the 4 of them are: what is tax loss harvesting? Good question. What are the superficial gain and loss rules? Can a trader or investor incorporate to mitigate a tax liability? Love that question. And then also, what are your favorite trading platforms? 4 great questions. You've got your own order of how you want to break them down. Which is first?
So we were discussing this beforehand, and we were both sort of intrigued with the can a trader incorporate to mitigate a tax liability? So let's dive right into that one. This is a very important topic, and it will really determine how much you pay in taxes. So as let's say a day trader or investor, you really have 2 routes to go down. If trading is, let's say, supplying most of your business income, you can actually file trading as a business activity. So when you're doing that, there are a few things to keep in mind. That normally when you sell a security and there's a capital gain, only 50% is taxed in Canada, like you know. If you're a trader, 100% is taxed. On the flip side, if you do have losses, these can actually be used 100% to offset your business income, which you can't do as a regular trader. Things like the superficial gain and loss rules, they don't actually apply to you. So there are a few things to keep in mind. Expenses, you can write them off. But then when looking at, let's say, a regular trader, that's not your main business activity, which is the most of us, you can use those capital gains rules so that 50% is yours to play with. Superficial loss rules apply to you as well. You can't deduct trading fees, you can't deduct your courses and educational material and things like that. So those are some things to keep in mind as well.
Yeah, and do you know if it's, so you have an incorporated business and you're trading through that, and usually corporate taxes are different than personal taxes. If you keep that money in the corporation, so you're not pulling it out, because when you pull it out, yes, you've got to worry about personal taxes at that time. For the capital gains, do you know if they're still done to your marginal rate, or are they then done to the corporate rate, I can imagine?
So a few caveats here. So when incorporating, it becomes a whole different beast. Because if you incorporate, you either are going to be, let's say, qualified as a small business in Canada and get those advantaged taxable rates, or you're going to be considered a small business and not have those rates. So there's a few rules that are pretty stringent, and a certain number of employees you have to actually benefit from the lower tax rates. Yeah. So most traders who incorporate aren't getting those benefits. And there's a lot of compliance burdens and regulatory burdens. So if you're looking to incorporate, definitely seek out a tax professional, because in most cases, it won't be worth your while. Yeah. If you're running a big trading shop, have numerous employees, and you want to incorporate, it might make sense, but for a regular trader who's, let's say, making all their income from daily trading, most cases incorporation will just become too expensive and it wouldn't be worth your while. But then again, run it by the accountant, and I'm sure he would have a big point to say there.
Yeah, because I was curious, because I've actually looked into that, not for trading. I don't trade that often to warrant being a corporation for myself. But when it came to REITs, and having rental properties, and making, if you had multiple rental properties, so say you had 4 or 5, you did this with friends, family, or yourself, that'd be amazing if you could do it yourself. I've always wondered, can you then create your own REIT? But the more I looked into it, you need certain things, like you need a minimum of 5 employees. You need a minimum. There are a lot of different things that I'm not nearly well versed in, but know enough to go, okay, I won't do that. not yet. No,
and that's something actually I've looked into as well in the REIT structure. Get a group of people, start buying apartment buildings. Maybe not the REIT structure, but just incorporating yourself and then buying real estate properties. That is an avenue that I see a lot of people go down. And maybe we can discuss that another time as well, because I'm a bit versed in that area as well.
Perfect. I've already got I always start the first 2 questions, the poll, because that's what Facebook makes you too. I might have to put that one in. Awesome. What was the next question that we're going to go over?
Yeah, so let's go over the trading platforms. So I would like to separate this into 3 categories. We have the cheapest, the most user-friendly, and the best for a seasoned trader. So the cheapest out there right now, and there's no plug intended here, is Wealthsimple Trade, which just launched, which is a $0 trading platform. So you're not charged any fees to make a trade, and this is the first in Canada. Recently in the US, we saw Robinhood be the first in the US. So they're not inventing the wheel. We've just been seeing a trend of lower and lower fees in Canada, and they're just the first to go to 0. It does have its limitations. It's only a mobile platform for right now, so you can only use it on your smartphone. You can't use it on your computer. Gotcha. And there's only non-registered accounts. TFSAs and RSPs are coming shortly, but you're limited to non-registered accounts for the time being. Next, I would say most user-friendly. I like Questrade. Questrade, for a novice investor, they really lay things out very plainly, but you do have to pay per trade. So with their first pricing model, it's roughly $5 at a minimum per stock trade to a maximum of $10. For options, you're looking at $10 plus $1 per contract. Very user-friendly. You can pay more if you want different markets on there and live streams. And also, they have some charting tools available to you as well. What are your thoughts there, Baron? What trading platforms do you like to use on a regular basis?
So I do have a Questrade account and a TD account. And as much as I can't stand so many things that happened with TD over the last year and a half, like we looked at them completely crashing, which is, I always joke about that. Does happen, cannabis literally crashed TD. During, was that just before New Year's, I think that was, like a year or 2 ago. All my times all morphed together now, but with all the things that have happened that have been really annoying, at the end of the day, because all of my accounts are with TD and I can transfer money so to your bank, fluidly between my TFSA, my cash account, my checking, savings, my credit card, I like that. I like the way their platform is set out. I do like Questrade in the sense that you get a little bit more freedom there. I like the fact that with Questrade, you're able to do the currency exchange in the same account. TD, you have to have a US cash or US TFSA or Canadian cash, Canadian TFSA. In Questrade, it just automatically does that conversion. It tells you right away what that conversion would be. So I like that feature. But I find myself, all of my trades and all of my investments, for the most part, are with TD for safety. I haven't used the new Wealthsimple one. Curious about it, but I have not opened it or even seen it yet. So unfortunately, I just don't have an opinion just at this very second.
No, I'd say give it a try. It's pretty unique. Again, the other accounts are going to come shortly. But yeah, if you have a non-registered account, definitely give it a go. Play around there. For our seasoned traders, I really like Interactive Brokers. They have the lowest fees almost in the business. We're talking 0.005 cents per share, minimum of $1 for stock trades. The platform itself, it's a bit complicated to understand if you're a novice trader. So they do have a free trial account, so you can do a practice account, get used to the platform, and see if it's right for you. But they have low margins, access to a wide variety of securities, but their charting tools is really what separates them from the pack. You can create your own setups for specific trades, very advanced tools, and yeah, I really like them for more technical trades. And then when we're looking on the options side, I really like the TD Thinkorswim platform. I think for options, they're top notch. Everything's laid out very clearly. So if you're an options trader, check out Thinkorswim because it is a very solid platform.
Awesome. Yeah, and it's funny because I do not use any of the TA tools from TD or from Questrade. Instead, I go QuoteStream. And that's where my L2. But even their charting is still limited. It's funny when you really talk to a seasoned trader or investor, they've got an account with like 2 or 3 banks. They've got their trading account. They've got QuoteStream because it's the best L2 and you got a lot of information. But then they go on TradingView or some other program to do their actual charts. So you should see some of the windows open sometimes. Just like they got like 15 windows open for one trade. It's funny.
With Interactive Brokers, actually, you're able to plug in different applications for your charting tools, so it actually works with other platforms as well, which makes them a bit unique as well.
Gotcha. So a lot of different pros and cons for various platforms we just mentioned, all the way from free, from Wealthsimple, all the way over to options, all the way over to charting, all the way over to convenience. It's a wide variety. Lots of picks out there.
I would say like when you're looking for a trading platform like buying a stock, do your proper due diligence, and if you have any questions, don't hesitate to bring it to the group, and we'll be happy to help you out there.
Perfect. Question 3, what was that today?
So let's go into tax loss harvesting. So if you're not familiar with tax loss harvesting, this can be a great way to reduce your overall tax burden and then in turn increase your net return on your investments. So for those who are wondering, what is tax loss harvesting? So it's selling a securities position that maybe didn't perform well throughout the year and you're in a loss position. So you sell this position and then repurchase a similar but different security. And you would do this to offset some of your winning positions. So let's say some of your stocks went up in value, and then you have this one position that went down in value. This loss position would help offset the capital gains from those securities. So let's take an example. Let's say you're holding Bell stock, and you really want to hold Bell stock long term. It's a good stock for you, and they had a bad year. So what you would do is before calendar end, you would sell Bell, and then you would invest in a similar company. Let's say TELUS. You would hold TELUS for 30 days. And then you would swap back to Bell because Bell is the company you want to hold long term.
Gotcha.
So if done correctly, it can really help lower that tax burden on a yearly basis and really help drive your overall return.
And 30 days, because if you do it within 30 days, that switch, like sell it and then buy it back in, that negates the ability to use it as a tax loss, I believe, correct?
Exactly. So that ties right into the next question. So that's why I didn't dive too much into detail.
See, I'm not looking at the tape, folks. I'm not looking at the tape. You knew of the tape.
I knew what was coming up next. But I'm curious, have you ever dabbled in, let's say, tax loss harvesting at all? I know it only applies to non-registered accounts for those of you. So it's not for your TFSAs, RSPs, only the non-registered accounts.
I am what you call a risky investor. I have all of my attention on high-risk stocks in cannabis and mining. I have all of my attention in my TFSA. I don't day trade per se. I'll have trades from time to time, but I don't necessarily day trade whatsoever in there because I like holding things for longer periods of time. I like investing opposed to trading. Everyone's different, but everything is through my TFSA and everything's in high-risk stocks. I don't necessarily recommend that for most people. I am comfortable with where I am because I am not married. I don't have a house. I don't have kids. I know what I'm doing with my capital.
We're still young.
I know my risk. My risk reward is where I want it to be. But no, I have not used capital losses yet because it's all my TFSA.
No, and let's say even if it was outside of the TFSA with those high risk plays, if you were to switch out for 30 days, something like cannabis and mining, it could shoot up during that 30 days. So be wary of the type of stocks you're doing this for. This is for, let's say, less volatile stocks. They don't have to have no volatility, but this would be for something maybe outside of your cannabis and mining sector, or more established, let's say, cannabis and mining, let's say.
Really quick question on that point. Are you meaning because you don't want to sell it, wait 30 days, and all of a sudden you're like, oh, why did I sell? Or is it because you sell it and now you got that 30 days, after that 30 days is where it tells you how much your capital loss was?
No, so yeah, what I'm saying is in that 30-day period, let's say your typical, let's say, high dividend paying stock, a mature stock, it really won't move that much. But if we're, let's say, selling at a low at one of these cannabis plays and then 30 days later it's at a real high, you're not repurchasing at a similar price at all. So you're going to have less shares for you and you're not going to have that gain per se because the similar security might not have went up that much. So this is for, let's say, more established plays and, let's say, more volatile plays. You do run that risk of it running up in price and then you're getting less shares for your money.
Perfect. Yeah, and that's why I just want to make sure for anyone watching, they knew that difference between that.
No, yeah, so it won't affect any like tax loss or anything of that nature, but yeah, it's just you might have less shares at the end of it and it might not work to your advantage.
Fair enough, fair enough. Well, I've already led us astray or led us into
the next one,
the next question. That was an unplanned segue, but going into the last question, what is it and what is the answer?
Yeah, so what are the superficial gain and loss rules? So a superficial loss, as we just spoke about, is when you sell, let's say, a security and then try and repurchase it immediately. So what you're trying to do is you're creating, let's say, a loss on paper, but you're not actually disposing the assets. You're just getting rid of it and then repurchasing it. CRA doesn't like this at all. So what they make you do is they make you purchase a similar but different security. So when we were talking about Bell, you might be wondering, well, why did I say to buy TELUS for 30 days? Well, the CRA states that you need to hold a similar but different security for 30 days before you can repurchase the initial security that you had a loss on. So let's say, yeah, with the Bell example, that's why we wanted to switch to TELUS and then switch back to Bell. Because even if the stocks are in the same sector, same sales region, and similar maturity cycle, they're considered different. But an ETF that tracks the same index, you got to watch out because they'll consider that identical and they'll apply the superficial loss rules, which means you don't get the capital loss.
Interesting. So what if I didn't sell it? I had my Bell and I sold it and I did not buy TELUS. Instead, I bought nothing, waited. Is there a certain time that I have to have elapsed that is greater than 30 days to go back into Bell? Or am I only tied to having to go directly into, say, a TELUS or Fido or whatever, AT&T for our American watchers, and then go back into Bell? Is there, you have to do that? Or maybe I have to wait 60 days if I don't do it?
No, yeah, great question. So you only have to wait 30 days, and during that period, you could either buy nothing, buy any stock, or buy a similar stock. I say a similar stock because if you, let's say you're following an asset allocation and you want the same exposure to, let's say, telecommunications, then you would replace Bell with TELUS sort of thing. Yeah. But no, any stock, it's pretty liberal. And the reason I say Bell and TELUS is because they'll likely move the same. So you'll likely experience the same volatility, gains, and growth during that period. So that's typically why we would recommend something in the same sector, very similar product.
Yeah, and that's what the point I was getting to. You're really approaching that from a fund manager's perspective of, hey, I don't want my capital just sitting out doing nothing.
Yeah.
I don't want to put my capital in something else because that's the allocation I wanted. If you've got 10% safe or 10% you wanted in telecommunications, that's probably a better example. Now you can still have that 10% in telecommunications.
Still get
it's
the same
not the
exposure,
exact same type of volatility or close enough.
Similar, yeah.
And then still be able to use that capital loss for future time. So that's a very, very strategic fund move or portfolio move.
Yeah, and it's always done at the end of the calendar year for tax purposes as well. So I'm guessing we might touch on this in December again. It might be nice, a little refresher for anyone who has those non-registered accounts to really initiate that properly.
Yeah, and then lastly, just on that point, I believe, they just switched this. So I always get this wrong. Have they switched to 2 trading days left in the year or 3 trading days left in the year for tax stock selling? I can't remember.
I believe it's 3. I believe it's been switched to 3. Don't quote me on that per se, but yeah, I'll have to double check, but I believe it's 3 on that one, yeah.
But that's why, and this is just out of the blue, that's why whenever you make any type of thing in your portfolio, due diligence first.
Due diligence,
because we're not machines. I can't
No.
remember every aspect, but I remember they changed it, and in the back of my head, I keep forgetting. They go 2 to 3 or 3 to 2. It's one of those funny things.
I remember them increasing it, so I remember it being 3. But yeah, we can touch on that later.
Yeah, and always look up. Always look up as well.
No.
But no, that's awesome, and a lot of people need to understand that, because if you start surpassing what your TFSA can hold, which is where I'm at right now, I'm just like, oh no, I have to actually start. I just did it in my first couple of trades in my cash account for the first time, because I'm actually at that threshold now where I got to watch out about my contribution limit if I'm adding more capital or anything like that. So yeah, it's good to know, and I appreciate you coming into the studio on a very busy day for yourself at work and being able to share this information with everybody.
Yeah, it's my pleasure. Yeah, I love educating the community, and I would say, yeah, throw those topical questions our way, and yeah, we'll be happy to discuss them live.
Perfect, man. Thank you very much. Always a pleasure. Tune in next week, folks, for another round of Ask a Fund Manager. Tune in to Follow the Money Investor Group, where we put this poll, where you can put your own questions in, vote on your own questions, and the top 4 get broken down by this guy.
Yeah, don't hesitate. Any question, throw it in there. There's no stupid questions. I'll be happy to answer anything we have there.
And we're back. Chris, you stole my line. Come on.
Sorry, go on.
We're back. Chris, man, honestly, I appreciate every time. He's a full-time fund manager.
Yeah.
He takes off that little section of the morning to be able to come in and answer these, and plus the time he has to put into
and he says that
firm,
Wednesdays is his busy day too, so to be able to do that, I commend you, sir.
Yeah, thank you. We've got some really great comments, both in the Facebook page and in the YouTube chat room, and just hearing people. Donald in the studio came out and said, love the part about the different platforms to use. And you had a couple comments about that too.
Honestly, like it was really like nice to hear about that kind of stuff, because I actually do use TD and I use Questrade as well. But to hear that Wealthsimple has their own like mobile platform, I mean, I probably won't go to it just yet. But if they start to do with like TSFAs and all that kind of stuff, because let me see, let me see if I can find my balances here.
$10 billion is his balance, and that's not a lie.
My last total count of trades this quarter has been 186.
What?
So
are they all done in your TA? No, don't answer that. Don't answer that.
So that's with TD, and that is basically like
1,800 and whatever you said dollars.
You got it, of just trading. So if I can find a goddamn platform that's cheaper. Actually, it does go down with TD if after 150, actually goes down to $4.99.
Oh my!
So you save half. If you trade a lot. So I never expected to trade that much, but I mean, with the way that this market is, especially like cannabis, like it's almost turned you, like me, into a trader. And I'm playing these things a little bit more because like things go up because of news, and then it's a sell, and then it just happens almost day in and day out. So I find myself doing that a lot. So if I can find an actual platform where it's a lot cheaper, that'd be a lot better, I think. So
well, it's important too. There's a couple of points here before we start going into the other aspects of the show and switching over to why mining, and specifically a really cool cobalt section we did with Peter Klausi. I love that one actually. But 2 points. So one of which are the different platforms. There's a lot of different platforms out there, and as you start finding out your niche, whether you're a trader, whether you're a swing trader, whether you like options, whether you like Forex, whether you're just a set it and forget it type of investor. There's different platforms that may be right for you. I mean, if you look at Scotiabank,
that's probably one of the worst.
Oh, I know. It's $25 a trade. Unless you have X amount
50,000.
50,000. Thank you. A net worth. So if you're just starting off, you're not going to want to start off with Scotia. That's just a personal opinion of mine. But because that's expensive. Well, then do you want to go to possibly Wealthsimple? Or Wealthsimple is free. But then they also don't have TFSA and those things as of right now, because they've just started unloading that. So they're like, okay, well, do I want to trade my TFSA? And it's just mobile. Do I want to trade? So there's a lot of pros and cons, and knowing them helps you make a better decision.
Oh, of course.
So knowing the difference between the Questrade and TD, and do you want the ability to have your money with it?
Chris really kind of answered all that a little bit too, like and dividing it into the three like that, like it just lays it out there for you. It's like, okay, well, here's the easiest, here's the cheapest, here's this. Like, okay.
No, I love it.
I can make a decision.
Odelay 5, that I'm guessing is not your real name, but in YouTube it is. The Odelay 5 says TC2000 is unquestionably the best platform. I believe this is an American platform. It has Canadian data in it, is what you're saying in the comments. I hadn't heard that myself, but when people are adamant on a certain trading platform, if you're American, look into TC2000. It could have some.
Sounds like you got it from Star Wars.
Yeah, yeah. It actually does, doesn't it? I like that. But the second point, though, I said 2 points. The second point is we were very much buy and hold when we first began.
Oh, 100%.
Very much. We
I had to
the
be because it went all red.
They all went all red. And yes, not lots of people don't sell. Yeah. But it really is a trader's paradise right now with how much volatility that's happening. No one's really holding their gains per se. So moving in and out of positions, although we are not financial advisors, so please don't just listen to us and say, Brand said it, Greg said it, Chris said it, I'm gonna do it. That's a bad way to treat your money. Don't do that. But you could hear different methods and maybe one of those
no, you're right.
click with you.
Yeah, 100%.
Because if you're holding cannabis in some of these companies, you will watch them go all the way, look at Namaste. Just really don't take away everything we do with management, everything that's good. But it went from 20, what'd you have it, 24 cents to begin
21 cents.
And
I sold most of it at, folks. But like you look at it, I bought it I sold most of it at like over $4.
Yeah.
And it is now at like 70 cents. Like,
it's crazy.
Like, that is a massive difference. And it's not because like the company is like pretty, like it's good. Like it has like a lot of good assets and everything like that. It's just, you never know what either management's gonna do or all that kind of stuff. So.
Yeah. Stay active is the biggest thing. It doesn't mean that you have to be a trader. Some people don't like being traders. You know, you don't want to be glued in front of a screen all day. Yeah. And I get that. Other people love that because they don't want their capital past close to be in the market.
Yeah, I wish
Everyone's different. I've said it so many times. This is a game. We're all playing a game. Yeah. Find out the way that you want to play it. But I think it's important for people to note that a lot of these cannabis companies, you know, they might not be buy and hold for 5 years. Yeah. If you've got it at 50 cents, I think you're good. If you got like a Aurora at 50 cents, is it going to go back to 50 cents? I don't know. That's a segue though.
At the same time, a lot of people say you got to take the profits.
Yeah.
But do you take it all?
No one ever went broke taking profits, Greg. That's a fact. That's a fact. By the way, I don't know how to say your name. Forgive me. Bartlomej? That's a very unique name. No, it really is. So forgive me. But you're on our FTMIG page saying Scotia just changed it to $9.99, I believe. So they might have realized that, wait a second, $25, we're crazy for charging that to people, and they might have changed it to $9.99.
To be honest with you, I hope they did, because...
At least they're laughing. I'm so sorry. I tried that name. I'm usually pretty good. Born and raised in Mississauga, but that's an interesting one.
What does born and raised in Mississauga have to do with anything?
You grew up with so many different ethnicities in your classroom. There were so many different people. The diversity in Mississauga.
Well, what else is going? Wagwan.
Yeah, what's up, go on. Then I moved to Oakville, and that's so much different.
Actually?
Oakville from Mississauga, yeah. Anyone in the GTA will know the difference between those two. But yeah, no, it's interesting, yeah. And he's saying, yeah, it is $9.99 now. So good job, Scotia, for coming into the proper.
Thank God.
You were gouging people before. You're back at it. I appreciate that.
Yeah, because my girlfriend's TSFA account is in Scotia, and so the first time I traded, I was like, okay, it better be a good trade because it's going to cost me. I'm like, if this goes down, then it's going to cost me $50 just to do it, like a full trade.
Yeah, that's crazy. Especially for people under $50,000 capital. They're not making large trades. That's kind of, I'm glad they changed that. Right. So this is an open-ended question. Understand, we say this all the time, but come on, folks, just know that we're not financial advisors. We spend a lot of time in the markets, and we talk to a lot of smart people, so a lot of the stuff that we hear and know, like we're getting a lot better at this for sure, but we're learning just with you.
Yeah.
But Aurora shocked a lot of people yesterday.
I think so.
It's hard to tell how to take that because they're essentially, so what happened yesterday is they put out
You should read the news release word for word.
Kind of like we're doing puff or pass?
No, because I know you like reading the news word for word.
Yeah.
While I do this.
I know, and we were laughing earlier because the amazing women and men who do the news here on the Midas Letter Network, it's tough at times. It's tough. And I always laugh because it actually is pretty hard, especially when someone's shaking the table so much I can't see. But I'm going to our website. If you ever want to know, by the way, FTMIG.com, you can go to the search function. I'm just going to type Aurora because all of them are archived. This guy beside me and Todd, Zach, a few others are relentless at getting these news releases aggregated so you can all have it in one area. But Aurora files preliminary base shelf prospectus. So Aurora announced today, this is late last night, that it had filed a preliminary short-form base shelf prospectus known as the Shelf Prospectus, with the security regulators in each province of Canada, except for the province of Quebec, because Quebec always wants to do this. They're different, we get that. The referendum didn't go through. And of course, oh my goodness, and the corresponding shelf registration statement on Form F10, the registration statement in the United States Securities and Exchange Commission, otherwise known as the SEC. Essentially what this is they're stating that, one, this is getting people ready that it sounds like they're going to do a filing and a raise in the United States, most likely. They are doing the first steps to get there. Notice that they're not opening this right now. It is stating that they can do through numerous different financial instruments. They go on to state maybe 6 or 7 different instruments where they will have up to $750 million USD, which is just over $1 billion Canadian, that they can and may or may not utilize over the next 25 months.
So what are they buying?
That's the big question. You know, what are they buying? You need capital. Look at Canopy. Canopy had $5 billion given to them, cash given to them. Although there were some CDs in there, some other stuff, but it's going to be coming out as cash.
Yeah.
If you're trying, and you are, Aurora is right up there with Canopy. They're trying to be the big guns. Their intention is to be the big players in the world. You need money to do that.
Oh yeah.
But I know a lot of people right now are also looking at that and say, well, wait a second. In order to get that $1 billion in Canadian dollars, there's going to be a lot of dilution to go with that. And although it hasn't happened now, there's a potential that it may happen.
Yeah,
So
and with all their other acquisitions, they've just diluted themselves. Oh,
very much so. So there's always a question here. So pay attention.
But the value of ACB is there still.
Correct.
So
correct. And speak on the exact word you use, value. Pay attention to this. It's very, very important. When you do dilution, you always have to ask yourself, is this company better than it was before? Is the value of your share better than it was before? So if there was 100 shares for $1, the value of that company is $100. If they dilute themselves by 100% and their share price never moved, well, you've lost half of your money, because now it's 200 shares at $1. That's now a market cap of $200. You now own that much less, half less of that company.
yeah.
What you really want to make sure, though, for all you know, they dilute themselves from 100 shares to 200 shares, but that 100 shares allow them to enter a new market. It allowed them to get a new revenue stream. It allowed them to make themselves that much more competitive.
Maybe open up Aurora Moon.
Aurora Moon, that's the last one to
know,
go. They got
right?
Sun, they got Vi, they got Mountain, they've got all of the different ones.
We're going to the moon.
Going to the moon, folks. But you really want to make sure that, did that dilution push the company forward? Did it add shareholder value? I cannot and will not hypothesize on will that happen with Aurora. Believe me, I'm truly not capable of doing that. Shouldn't be doing that. There are funds that have people with their MBAs, their CFAs, who are all working at this, and they don't have the answers. Probably means I don't have the answer. But you got to ask yourself what's going on. I think short term, I think this at least will spook people enough. I think
I don't think it was like market sentiment. I don't think it was very good. I mean, they're not really that bad today, to be honest with you, from how much people were negatively talking about it. But yeah, I think short term, I think it will be hit a little bit, but long term, if you're holding it,
yeah.
the value of that company is still there. The amount of things that they can buy, and now with another $1 billion,
Yeah.
who knows?
Yeah, I'd really like. I take every.
If you had $1 billion, who would you buy?
$1 billion?
Who would you buy?
I'd be on an island somewhere.
No. No.
Just not part of the game?
No.
Who would I buy if I had $1 billion?
Yeah, what company is out there that you're just like,
Man,
I can't believe it?
You know what? Don't take this as advice. I'd take James E. Wagner.
Oh.
I really do. I really think I would. I've always really enjoyed what they're doing over there. I think Nathaniel is one of the smartest people in this business.
Yeah.
And what they're going to be able to do with that technology, I think it goes well beyond just cannabis. It could be used for tomatoes. It could be used for produce. It could be used for, and as we keep building these mega cities, we're taking away a lot of our rural land. We're taking away a lot of the farms. So what we're going to need to start doing is hydroponics, aeroponics, whatever it be, and we're going to have to start building our vegetation vertically. Look at the Dutch. The Dutch are fantastic for this. That's why the Dutch came over and started helping Aurora Sky with theirs, because they were known. You know, in the Netherlands. The stat eludes me right now, but it was something about bananas or something like that, where they were like the lead providers of bananas. Don't take that, like, I'll have to Google in between our next video here, but something unbelievable, but it's because they do so many different things in greenhouses, and they stack vertically, and they can grow things faster, more efficiently.
Well, you just get
all
more
of that.
square footage too, right? Like, why not?
So no, it's really important to look into these things. But yeah, that's who I would buy. It's probably them because of their technology there.
I accept that.
Yeah. Moving into another gear. There's a video that we put in here. Go look at the top of the comments, whether you're an FTMIG page or if you're watching us on Midas right now. Scroll to the very top. There's a LinkedIn link there. After this show, in between 2:30 and 3 o'clock, because that's the only half hour you get before James and Ed come on. You gotta get ready. But you can watch it then. It's a 3-minute clip of a scientist breaking down a phone, finding out what metals were in that phone, and then taking that and multiplying that by the global demand for cell phones. Phenomenal piece. It just shows you just one piece of technology that we use and take for granted all the time, how much metals go into it. So watch that video afterwards. It'll explain more about the why mining clip that we're about to play here, because we were able to sit down with Chris Arthur was earlier, with Peter Klausy, came into our studio. This was a few nights ago, and we broke out a certain clip about why mining and why cobalt. I think it was fantastic. Let's roll that, because I want people to see why we're excited about mining and why the demand for mining is going nowhere, but the supply is not keeping up. That's a scarcity. That's what I want to invest in personally. So why don't we roll that? Oh, he's getting the point, guys. He's getting the point. Now, speaking of projects, we'll dive right into it, because I know we have a lot of stories about cobalt and different things that I'm fascinated, because you stopped halfway, like, no, we'll save this for the show. But we're talking about projects. We're talking about mining, in very specifically. You are CEO of a cobalt company. Can you explain that real quickly?
Sure. We were in a company, and like a lot of other companies, we were floundering. The mining market was bad. It was difficult to raise money, and everybody was stampeding into lithium. Quite frankly, I never understood lithium. We all talk about a lithium-ion battery. And that makes it sound that the lithium's so important. But in my little cell phone here, there's 12 times more cobalt than lithium. In your laptop, I notice I didn't get a laptop, but there's more cobalt than lithium. It's a trick of physics that it's called a lithium-ion battery. The ion that goes from positive to negative and is rechargeable is the lithium ion that gets released. And that's why it's called a lithium-ion battery. There's more cobalt, there's more nickel, there's more manganese, there's more copper than there is lithium. So we looked at this and decided we didn't want to be just another person chasing brine down in Argentina or trying to punch hard rock near Thunder Bay. It's a hard way to make a living. But once you start researching lithium, you can't help but find cobalt. At the time, cobalt was trading around $22,000 a ton, which sounds like a lot, but it's not really in the grand scale of global economics. There was mainly one place in the world that produces cobalt, and that's the Congo, not known for its stability. Like the 4 horsemen of the apocalypse fly through the Congo every day. It's the home of Ebola. This year they held the 2017 presidential election, which was nice of them to fit in. The leader of the opposition was shot last year. The Catholic Church ran an intervention to try to negotiate peace. The poor Congo people have been tortured since they were first discovered by King Leopold of Belgium, who would cut off limbs and cut off genitalia and offer rewards for bringing in body parts. The counts on the murdered Congolese range between 6 and 20 million people dead. And
Wow.
somehow King Leopold has escaped history's wrath.
Yeah, I've never heard that story at all.
Well, it's been, like a lot of good stories of the explorers, it's been whitewashed by the guys who wrote history.
Yeah.
So
No, I agree
Congo
with
is
that.
not a good place to go looking for cobalt.
It's not, but 60% of the world's cobalt is in the Congo.
Right.
And most of it is being purchased by China, put over the Great Big Red Wall, and we don't know what happens to it then. There's artisanal mining. If ever you're in a good mood, you want to kill that mood, go to Amnesty International's website. There they have a video on the children who artisanally mine cobalt with hand-hewn tools. It's called This Is What We Die For. And it's a most depressing 15-minute video on children, flip-flops, barefoot, no shirt, working in small tunnels with no protection. You don't know what gases are down there. There are cave-ins. People are dying every day to supply that cobalt. And that's why we're only looking in ethical jurisdictions. You need to have that ability to show that you're a good company. You're not hurting people. You're contributing to your community. You have a corporate social responsibility to the people around you to do it correctly.
Yeah.
And that's the decision we made. There is one mine in the world that produces mainly cobalt. Cobalt's always a byproduct. That mine is in Morocco, and that one mine produces less than half of 1% of the global supply of cobalt.
Wow.
So that's 99.5% of the supply of cobalt is a byproduct. Now, there's some interesting economic implications of that. Even if you have a lot of cobalt in a deposit, you can't mine it unless you have another metal that you can mine with it. Generally, it's copper or nickel. So you need a mass amount of copper that's economic, that has cobalt in it, or a mass amount of nickel that has cobalt in it. You can't just mine the cobalt.
So yeah,
Why-
it's
why
really
is that?
hard. Oh, sorry.
Is it the
The earth, all the metals are mixed together in the earth. It's not a layer of cobalt
Okay.
and then a layer of nickel. It's all mixed together. It's like a stir fry. You can't
Got
just,
it.
right?
Okay.
And
Yeah.
it's hard to recycle these lithium-ion batteries because the best metaphor I have for you is take an egg, mix it up with some onions, fry it up, cook it. It fundamentally changes how it is. You can't take that egg and put it back in the shell.
Yeah.
Same thing with the cobalt after it's been treated. It's fundamentally different. It makes it very difficult to recycle.
Yeah.
Do you have some with you? Some
I do.
cobalt?
Yeah, and it's interesting as well because we've got so much demand for cobalt, as clearly as you just said, in our laptops, in our cell phones, and in so many different items that we use every single day, and virtually the only source is
The Congo.
the Congo.
Now, if we're thinking about the EV movement, the electric vehicle movement, and the batteries, what are the main metals in there? Is it nickel, lithium, cobalt?
Well, there's a cathode and an anode and a case.
Okay.
Any battery really has only 5 parts. The cathode, the anode, the medium that holds them together,
Okay.
and the case that holds them in. Hang on, I said 5 parts. I'm missing one. Oh, the line between them, the circuit.
The
That
circuit,
links
yeah.
them, and then the medium that it travels between.
Right.
Every battery in the world has those 5 elements. There's a
Okay.
great website called Battery University that can walk you through everything from the batteries you use in your electric toothbrush to the ones using remote control and tell you all the differences between them. It's really quite an
I'll check YouTube. They'll probably have some stuff there.
Yeah,
too.
yeah.
Well, actually, there's an interesting demographic difference. I was talking about a website because I'm an old guy, and you want to go to
Go
YouTube.
right to YouTube.
I can't read. I'm just going to listen.
Listening and watching is always easier. That's why right
the
now
visual- it's
people
the
can
visuals.
listen and watch us.
Yeah.
But we will get some subtitles up there in the very near future, so you can do all 3:
Nice.
read, see, and listen.
So people have been trying to reactivate old projects, as you were mentioning earlier, that have cobalt in them. There are some properties globally that one time were marketed as gold properties because they had some gold, but they couldn't get it going. Then there were bismuth properties, and now they're being marketed as cobalt properties when they're really polymetallic. And the goal is to find a way to get the stuff out of the ground, separate it from the ore economically. And that's a large part of the geologist's job.
Yeah. And do you already have some locations that you're currently in right now with CBLT, or are there other ones you're looking into? Where are you with that process?
We did two things let's call it three things in CBLT. First was we acquired cobalt projects in Northern Ontario and in Quebec. There's a region of Northern Ontario called the Gauganda Cobalt Silver Camp, where a lot of cobalt and silver was taken from. Also the site of Ontario's first producing gold mine, which preceded the silver and the cobalt, at Swastika.
Yeah.
Okay.
There was a part of town called the Silver Sidewalk, where the silver vein was so thick on surface, it looked like you were walking down a sidewalk.
Wow.
There's some
Imagine
famous
that.
historical pictures
Crazy.
of guys with wheelbarrows just picking up slabs of silver literally off the surface and
Wow.
hauling them away. But after that, you had to go underground to find the cobalt. So in the 1920s and the 1930s, the environmental regulations weren't as tough as they are now. So what people would do is get hand-powered or gas-powered power washers and just wash the outcrop, basically blow the trees down, blow all the dirt off the rocks, and walk until you found a vein.
Wow.
Yeah, that's why a lot of the rocks up there are stripped and are still barren.
Wow. It's fascinating mining, eh?
Mining is one that I've spent a lot of, like, I pride myself in being able to learn things like that. I love it. I try to read, I try to watch, I try to always think, be around people who are smarter than me in certain ways so I can pick their brains and figure out what I want. But when it comes to mining, I have been learning a lot. I think I've come a long way since the beginning, but it's fascinating that I feel like this is a sector you can be learning your entire life, because there are so many different regions, there are so many different metals, there are so many different procedures, so many different everything about this. But at the end of the day, you just know that humans need it. We use it. Scarcity, that's got me.
There are a lot of parts to mining that hurt the brain. There's a great fossil park outside Buffalo. It's probably the best fossil park in North America. You go there with a hammer, go there with your safety glasses, you bang away, and you bring up trilobites, brachiopods, clams, things from about 430 million years ago that used to be out in the middle of the Atlantic Ocean. The Atlantic Ocean is just a giant rift valley that's opening up. Every day when you wake up, your head is that much further from Paris, France than it was the day before, because the rift valley is still expanding. And these kinds of things hurt the head.
Yeah.
A good geologist in parts of Quebec is a good geologist in Texas and Scotland, because at one time there was a formation called the Grenville,
Yeah.
which was the Grenville assemblage. Now with continental drift, it's been pulled apart, but the Blue Ridge Mountains of Kentucky are part of the Grenville, as Scotland is, as is part of Quebec. And they have the same age, the same geologic formations. That kind of stuff hurts the brain.
Yeah, and what also hurts the brain is the scotch that's probably named after that. Now that I hear that, the Granville. It's a great scotch, so that hurts your head too, and I wouldn't be surprised. Come from Scotland, it's related to that.
It probably is.
Just deducing that, I could have just told everyone a complete lie. I don't know, but no. So you've got a bunch of cobalt here,
Right, so this is the answer to the second part of your question. What are we doing? So not a lot of people in the world have actually seen cobalt. There's a phrase called cobalt bloom, which is where cobalt turns pink.
Oh, yeah.
You see that?
Yeah.
And so
Can I?
before they had really good technology, they would find the cobalt by standing on a hillside, spraying it, looking for the vein, and then looking for the pink inside the vein. And the pink inside the vein would be an indicator of cobalt.
Yeah.
So these are from Northern Ontario in the Gauganda region. I picked these off the surface.
This is outcrop.
Sure.
Am I wrong,
No,
though?
the pink is
You-
very.
you were
I'll
neither
go on
right
this
nor
camera,
wrong.
Wes,
Okay.
off the
Could be
side here. I
right.
want to show this. This
Wow.
is,
And there's my notes I took at the time.
yeah.
Ah, that's fascinating.
June 2017. Yeah. So very few people have seen cobalt in the wild. We've all seen gold. We've all seen silver. Look at this piece with all the pink in that.
Yeah. I never would have thought the pink. I'll get up because I'm allowed to do whatever I want. And I'm going to go right into this because this camera here is going to see the pink. And we'll wait till we switch over.
There you go.
There we go. Because you have to see it if we can focus in on that.
Yeah, back up a bit.
It's just very unique to see that. I never thought that.
There's also another type of cobalt that reacts and becomes green.
Yeah.
Well, if only I had a sample of that.
Yeah.
Here you go.
Coincidence?
I'll trade
I
you.
think not.
So this green is just host rock. It's nothing special. The white is the quartz vein. And if you look carefully, you can see some cobalt in there. There's a little bit of gold and a little bit of nickel.
Oh yeah, I can see the pink.
That's from our property in Sudbury called Copper Prince.
Wow.
So you see all the pink down the edges?
Yeah.
Yeah. Oh, beautiful rocks.
And if you wet your fingers and then rub your wet fingers over it, it really shines. And
pink?
the nickel pops out. Here.
The nickel pops out? Let's see. Oh yeah.
Look at that. It takes on a beautiful deep pink color.
Yeah.
That's
Those
really
are
cool.
awesome.
Can you put that up to the camera? Where it's
I have
wet?
to get up again?
Yeah.
Here, we'll see if we can get it far away. Let's see how far. Let's see what are these X5s? Let's see how they can zoom in. There we go, the zoom. No, I love that though. And this is what you mean by, you're saying this is cobalt in here, but we just spoke about nickel. We spoke about gold. Like there's so many different.
You never find cobalt on its own except in that one small place in Morocco. It's always with something else. So the green is the host rock. And then you have the quartz veins. Now, what's cool? A lot of cool things about Sudbury. Sudbury is the quantum physics of geology. To be a good quantum physicist, you have to first learn physics and then forget everything you know and learn quantum physics.
Yeah.
Sudbury is the same thing. To be a good geologist in Sudbury, you have to first learn geology, then forget everything you know. Because the asteroid hit 2.85 billion years ago. And it did not introduce new metals. It didn't bring stuff from the sky. But imagine the force of that asteroid hitting the Earth, the energy it impacted, the heat, the power. So it literally melted rock. So the best metaphor I can give you is take a block of ice, pour boiling water on it. What happens? Well, the ice cracks in places, in other places it doesn't. Water goes into the cracks and water pools around the outside. Same thing happened when the asteroid hit and impacted and brought all that energy. Metals melted. Quartz veins were formed. They filled with metals. They filled with the quartz. And that's why prospectors go looking for quartz veins. There's no point looking for the good stuff in the mafic rock because that's just the host rock.
Yeah.
You want to look for the quartz veins, and the asteroid is part of the explanation as to why.
Interesting. You learn something new every single day, folks.
I like Peter.
Yeah.
He's cool.
Can I come back?
Yeah.
We'll do cannabis next time.
I wish,
there we go.
I
'cause
wish my horn was working.
That's an area that you know a lot as well, actually.
Yeah, and my opinions don't really run with the crowd on that,
Yeah.
which is why I keep getting asked back.
Yeah.
Do you like nickel?
Yeah, nickel is... UBS Warburg did a study 2 years ago where they took apart a small electric car and they broke it down into its base components.
I like where you're going.
And they said if every car on the planet was like this is the impact it would have on all of these metals. You would need more nickel. You would need more copper. You would need a lot more cobalt. You would need more of the two rare earths that are 59 and 60 on the periodic table. And I always screw it up when I pronounce them. There's dysprosium and presbyndanium, I think.
I'm going to say that is exactly it, because I don't know.
Yeah, you've got a laptop. You can look it up.
I'll go to YouTube to find out.
We'll come back to those in a second because
Yeah.
they're relevant to this conversation as well. But we don't need as much steel. There are a lot of things you do not need with electric vehicles. You need more copper because there's a battery and there's a harness and that whole array, which the copper conductors. So on an electric vehicle, you need roughly 35 kilograms more copper than you do in your standard combustion engine. So all of these consumptions will go up. There is a cost to electrifying the world. We all think you just take your phone and plug it in, great. You're going to take your Tesla and plug it in, great. Who's going to build the power grid? You know, the single greatest use of electricity in Canada is transmission failure and transmission loss.
It's interesting.
So we need better technologies if we are going to electrify Canada.
Yeah.
And that includes the use of the metals to do a better job of getting the electricity from the generation site to where you need it to make it work.
Yeah, and especially with you're looking at all these other car manufacturers. You know, before it was just Tesla. Then you had like your Prius, and you had a few other guys come to the game. But now you're looking in BMW, you're looking at Jaguar, you're looking at Acura, you're looking at all of these companies are realizing the potential of electric cars, and I think that is where we're headed. And even the hybrids are really, really popular. as it's happening, both what you just said there are going to grow. The need for the batteries, and even more so, the need to run brand new lines, because they're not going to use the same lines, I don't believe. Like, I don't know where they connect, and I'm quite ignorant in this area, though. But when you have charging stations, you're going to have to build those in a lot of different areas. Well, I'm pretty sure those are going to have to be connected to energy, to some sort of energy source. And I'm pretty sure you're going to be running copper and those different things in those lines leading to that. So it's just double impact.
When it comes to performance of these batteries for electric vehicles, what metals do they need to enhance the batteries? Like, are there some that help out? Like, I've read articles on nickel. I know, because of GGI, we follow nickel a lot.
Right.
But would that stand for all the metals that go into those batteries to increase the performance?
Well, there are different formulations depending on the use you need. We talked about vanadium earlier. There's such a thing called the vanadium redox battery. But that's a larger battery. You have a summer camp, you plug in it, charge it for 2 months, then take it to the summer camp and drop it off there. The smaller, lighter batteries, lithium ion, mainly cobalt, nickel, manganese, and graphite, which you absolutely need. There are some formulations that use different amounts of cobalt depending how fast you want to charge the battery. How long do you want the charge to last? How much push do you need out of that battery when you step on the gas? So you have different formulations depending upon the different needs.
Okay.
Graphite, manganese, copper, nickel, cobalt, 5 essential metals for the battery world.
Yeah. And we're not done yet. We're not even close. I think it's going to be such a revolution of battery powered everything coming in.
Yep.
Who was saying they were going to start using battery powered drills for mining? One of these companies.
I saw Plains today. I saw an article about.
I think Glencore's announced a completely electric mine site.
Yeah, something like that. Like which
drills, drilling,
everything.
I think
which is very interesting because now.
I think it was Gold Corp.
And it makes sense too because
it was one of those headlines I skimmed through really quickly. So it's not saying, but I remember seeing that. I'm like, oh, that's interesting. They're even bringing in electric vehicles, electric equipment to mine the metals that they need to make those electric. It's just a funny circle. I like seeing it too. And gas is obviously incredibly expensive, and batteries are the way of the future. I cut you off though.
Oh, it's okay. I don't remember what I was going to say.
Yeah, I was looking over there. I was pausing for a second. I'm like, I don't know if he forgot what he was going to say there. So my apologies on that one.
So then, still answering your question from half an hour ago.
Hey, we digress.
We knew there was global demand for Canadian cobalt properties. So we bought some in Northern Ontario, went to Australia, met with a long string of investment bankers, brokers, finance people, showed them what we had, and wound up selling assets to Australian companies and generating a good profit for the company. So in this time when it's very difficult to finance junior mining companies, we generated significant capital without having to dilute the shareholders by doing M&A activity. Sometimes you can make more money with your pen than you can with the drill bit.
I like Peter even more.
Being honest, we're getting some fire here, folks. Some truth,
less dilution.
Yep.
Me likey.
Yep.
No dilution.
Me likey more.
And thank you very much as I turn off the volume on that, because you could probably hear that too. Peter, much appreciated, man. I love that.
He knows a lot. I'm not going to lie to you.
Yeah, he came on. So we did our nightly podcast.
Eyes were going a little cross-eyed a little bit, but
and had him come on our podcast.
Yeah.
And it was one of those it was about 50 minutes long, our interaction with him. But that 20 or some odd minutes that we just played, like, no, we really want to show that to a lot of more people.
Yeah.
Because he's really informative. He says things in a way that people who have no idea what mining is can understand it. And I saw some comments in here. People are looking at, mining can be very dangerous. Mining, all these. That's true. You have to be careful with mining because there is risk there.
Are you talking about investing in mining, or are you talking about like literal dangers of mining?
Investing in mining.
Okay.
There are dangers for sure.
Gotcha.
Specifically about investing in mining.
Yeah.
That's where I want a lot of my capital right now. I want to start, and I'm trying. I'm learning here because I want to learn who are the people who really understand the industry. We've had some really great connections with us for a while. Sean Kingsley, shout out to you, my man. Neil from Raise Capital. There's a Raise event, by the way, April 11th. It's free. It's in Toronto. If you're in Toronto, there are lots of small cap people there. Greg Johnson, Michael Riley, Chris Ackerman, Tim Johnson, the 4 Metallic Group executives. There's more, of course, but those ones we talk to a lot. There's just a lot of people, Peter Klausy, Ed and James talking to you. They've been mining for a long time. I love talking to them because then you can start sifting out, or at least doing your best, which management teams have done it before, what regions are pretty good regions to be in, and then, there's risk there, but there's a lot of reward if you're able to pick the right horses.
The only kind of mining that I kind of was really into is the companies that took over a shell.
For cannabis.
For cannabis.
Aurora used to be a shell for cannabis.
Right.
That's where it came from. Aurora was. Supreme Cannabis was. About 60% of the other people out there were.
100%.
Don't have an asset? You know what? Shareholders first. Roll back the share structure. Find a nice asset. Roll it in. Get a few consulting options. Get a little things here, a little here, a little here. Take it public, and bam! You're now a $1 billion company. That's not how it's supposed to work.
That seems easy.
But it's how it worked, folks.
It's
how it worked. And I am jealous for all those who knew that and got into those Auroras and all those very early. Kudos.
You kind of did.
Well, I got Aurora $2, but not Shell early. Not Shell early.
Yeah.
I want to find Shell early. That's where I'm looking, folks. That's where I'm looking. I'm
Got
willing.
any shells? Bring them to this guy.
Honestly, I've got some really early private placement cannabis plays looking to go public in the next few months.
Okay.
A lot of that capital I'm going to then be putting, 10 grand, 15 grand.
So are you telling the people that you have money, and if they have a shell, to give you a call?
If you guys see it around, shoot me an email, give me a call, give me a text, message me on WhatsApp, on Telegram, on Discord, on Facebook Messenger, on email, on Hotmail, on Gmail, on YouTube chat room, Facebook chat room. Call me. I'd love to know. I want in.
Excellent news.
Because those are the plays, though. I'm patient. I don't mind waiting 2 or 3 years. If you do 5 private placements, again, hypothetical, do not listen to me. Just listen to what I'm saying and then do what you want to do on your own accord.
Yeah, do some DD.
If you've got 5 plays that you've talked to people in the industry, like, you know what? Yeah, I like that management. You know what? Yeah, I like that land package. You know what? I think they're doing right. You know what? That shell is being built the right way. If you can find 5 of those, let's just say you put 10 grand in each. Let's say you put 5 grand in each. If people are, you don't have much money to go, 5 grand in each. All you need is 1 or 2 of those to be plays that management team and the package they had, and it worked out. What if one of them did, and that one's a 10-bagger? You got 50 grand on that other one. What if the other 4 completely failed, and somehow you lost all of it? I don't know how you lost all of it, but let's just say you lost all of it.
You're still up 30.
You're still up $30,000. Diversification, hedging, but being smart. Don't just think,
So how many are you in?
Private placements?
Yeah.
I'm not in many right now. I'm only in 4 or 5 private placements.
You only need 5. You only need 5. I'm not in many. I'm in 5.
Yeah, I'm in 5 right now, but I put.
So you're banking on one of them to at least do
I
something
loaded the truck on one. I backed at the truck, I loaded it up, and then sold the truck to get more into where that pile was. I think that one's going to work out well, but that's just me personally. Remember, no kids, no wife, don't own a home. There's a reason why I'm able to be this risky. I know that I'm being risky. It doesn't work for everyone, but if you can find those opportunities, look, they're worth the wait in my personal opinion, because there's a lot more potential. Think of the ones where you see like, oh, 500%. What about that person who's been in that shell for 3 years or 2 years? And then all of a sudden they get a little text and, okay. Well then.
See ya.
So it won't always work there. You could have all 5 fail. Look, it's the possibility, but it's a game, and investing is not a for sure thing. If you want a for sure thing, go get a GIC. Go get U.S. Treasury bonds. Go get mutual funds and have TD or whoever, multiply each other. There's nothing wrong with those either. But if you really want to grow your portfolio, you need to have at least a little bit into some sort of riskier asset that you didn't just blindly throw a dart because you heard myself, you heard Greg, you heard Carl, you heard James say, but because you've put time into figuring it out. You've asked friends, you've asked family, you've looked into the company, you've called the company, emailed them.
Well, why not?
Then I think those types of risks do have reward in them. Just don't do them blindly. Do your due diligence on them, but they can be very, very fortuitous when you start getting used to it.
Yep. I mean, even investing into some real estate, you can't go too wrong with that either.
Yeah.
I just bought a house.
You did just buy a house.
I don't know if you knew that. You knew that, eh?
I did.
Huh, I tell you things, eh?
You tell me some stuff. Yeah, it's
Okay.
almost like we talk outside of here. We finished, comes to 2:30. All right, peace, bud. Won't talk to you till next week. But no, you have to diversify.
You gotta diversify.
Your portfolio. You got to have some land at times. You got to have some safer bets at times. You got to make sure it's always good practice in your savings account, which I do not utilize. So I am so hypocritical when I'm about to say this. To have in your savings account at least 3 months of expenses, so that if you lose your job, you get injured, or something like that happens, you don't have to start selling your portfolio that it hasn't come to fruition yet. You know,
Yeah.
you don't have to panic. You have time. Again, I'm way riskier than you should be right now, but I know that I am, and I'm okay with it personally.
Yeah.
But yeah, I gotta be smart, guys. Odelay is really against these mining plays, and I like to hear the contrarian point of view, so don't think I'm calling you out whatsoever. Said, think about that, guys. Reverse takeovers to cannabis because all the mining companies went to the shelf. You're not wrong there. We just went through an incredibly bearish, they still are, in the mining sector, where equities have been the whole thing. All this quantitative easing has been helping them. If you watch our podcast we did with both Sean Kingsley and the full podcast we did with Peter, we talk about PDAC, which is the world's largest mining convention. It happens in Toronto. It just happened in March 3rd or 6th, I think. And if you look there, it's a lot of institution money. It's a lot of industry people, but you can really, when you see them, and they're talking, we get close up in my face for a second, and they're talking about their company and saying, yeah, we've got a couple mines, and you can
Wow.
you can really see, I'm not joking, you can see the life sucked out of them because it's been a long time, and a lot of these mining plays, good management will say, hey, we got nothing, pack it up, roll it back, the share if you need to, and find another asset to go into it because they need their first intentions for shareholders. So yeah, you are right, Odelay, that did happen, but you also have to notice that the commodities and equity cycle, where commodities are versus equities, has not been such a large transparency since the 70s. We said this numerous times now. We're in a trough. It's a cyclical sector. We need all these metals. They're going nowhere. I don't know why I'm doing this, Greg, but I'm going to keep doing it until the end of my rant. The demand is going nowhere. The supply is going down. When demand goes up, supply goes down. Prices go up because that's the invisible hand, even though my hands are not invisible. Now they are. Ha ha ha. But you can keep going and you can realize, I can hear them laughing in the studio, which is a closed door. But you can realize, though, that there's a higher potential that we are turning a corner in this cycle that we're in. And it won't happen tomorrow. It's not happening today.
Yeah.
But just know, if you're patient, there's definitely opportunity in there.
Gotta find the right ones.
When it runs, it very may well run. So be smart with your money. Don't go all in. That'd be absolutely crazy if someone talks behind me, so I'm going to keep talking a lot louder because we're still on air. That's why, though, you should be really looking into these investments. Just saying, mining could be boring. You should be looking into it. That is my rant.
Wow.
Yeah.
That was
How is that? Is that a golf clap, folks? Is that a golf clap?
impressive.
Oh, I swear half the time I'm midway through a sentence, I don't know where I'm going with it, but I'm going to see if it casts a distraction.
Bet you that guy really wished he didn't comment on there now.
No. I want to be another point here really quickly. I very much admire and hope that people have contrarian views. Odelay, if you're still watching, you weren't rude about anything. That's the big thing. You can bring up good points without being an asshole. And in no way was he whatsoever. He's just bringing up valid points. And I like those because it forces you to one of two things. One, you'll hear what they're saying and look at their facts and you'll research everything and be like, you know what? This person might actually be right. And it helps you make a better decision. Or two, it forces you to look at what decision you made and to think, okay, I looked at all these, but they didn't look at this, and it makes you actually more sound in your decision if your due diligence pans out.
Yep.
So for all the people who are contrarians, we more than welcome on Midas Letter, we more than welcome at Follow the Money in our chat rooms, wherever it is, just have due diligence behind it. be a human being. Don't put down others. Don't be that asshole. Because personally, on our network, we will kick you off. We'll ban you. We don't want people like that. Instead, we want people like Odelay who brings up good points.
Yep.
Causes people to think. That's how we get better as a community and as a group.
Yep. Well said.
Yeah.
Well said.
So I appreciate it. Yeah, perfect. So 220, as anyone other than Torontonians say, because really we just say 220. We don't have the second T in any of our words. Why? I don't know. I didn't make it up. But it's 220. I think we're done today.
Yeah, you're done.
Yeah,
You're done here.
I'm going up to Muskoka. I'm gonna go.
Man,
there's still snow up there
vacation
somehow.
time. Really, eh?
Yeah, I've got my my cousin Caroline. Shout out to you if you're watching. Matt, her husband, are down from Scotland. So I'm going to, hence how white and ginger my beard is. I'm going to go hang out with them, go see my nieces, go get some snow, say hello to my mom, take a break, even though you know I'm going to be hanging out with my nieces while on the laptop and a cell phone at the same time.
Oh, yeah. Never stops,
Yeah.
buddy.
But no, it's fantastic. Thanks for coming on the show, Greg, and you always giving your time.
Oh, yeah.
Chris Arthur, thank you very much. Peter Klausy, thank you very much. All the people in the chat rooms, appreciate it, right? We're learning, folks. You know, none of us are these incredible experts. Some of our guests are, that's why we bring them on. We're all learning, we're all growing. Years from now, we're all going to be like Greg and have multiple billions of dollars in his private placements. Because how many private placements do you have?
Well, I don't know. 21, 22, something like that.
He's loaded to the gills, folks, and he's got warrants on warrants. So good luck with all that. You are now a fund
appreciate
manager, whether you want it to be or not. I don't see how
We'll go
those
with
go.
Chris.
But yeah, we need Chris back over here. Chris, can you manage Greg's portfolio? You may need it. But
Call me.
hey, we're learning, we're growing. Thanks everyone for tuning in. We'll catch you later tonight at 6 o'clock because Greg's going to be on air with Carl over at FTM Media. We're doing our podcast. 3 o'clock, you've got James and Ed coming on. There's lots of information still, folks. Tune in. See you next week.